If you have this impression that AI is not something that's going to be helpful for you because you've used it before, you should constantly be reevaluating that prior, because the level of development happening is genuinely unusual and is not the same as any other software buying practice.
We're thrilled to have Ara Kharazian, lead economist at Ramp, with us today. Ara works closely with Ramp's data and research initiatives, including the Ramp AI Index, which tracks how businesses across the economy are actually adopting AI tools in practice. His perspective connects directly to a theme explored in Accordion's recent white paper, AI and PE, ahead of the market, behind the curve. The report combines insights from PE operators with Ramp spin data to show a striking pattern. Many portfolio companies are moving early on AI experimentation, but still lagging when it comes to scaled operational adoption. Welcome, Ara. Look, we use Ramp all the time with our clients, but for listeners who don't know, can you give us maybe a quick explanation of Ramp?
So thanks for having me. First of all, Ramp is a corporate card bill pay platform for businesses, a spend platform. So the best way to talk about it for me is actually thinking about the kinds of data that I have access to as a researcher. So anytime a business spends money, in order to be IRS compliant, need to snap a picture of that receipt and upload it to Ramp's platform. That's essentially the data I have access to. So instead of a typical transaction data set where you just see, where businesses are buying from, we actually get to see the line items that show up on receipts. Now, this ends up being really helpful if you're trying to analyze trends in AI spend and investment, where it's not necessarily enough to know, oh, that businesses are buying just from like an OpenAI and Anthropic. It's really helpful to know the trends and how they're buying it, whether or not they're buying more API services versus chat services, whether or not they're buying the most advanced models or the cheap models. And then in addition to that, because we're this larger business spend platform, we have a lot of all this information about the actual businesses on our platform and what makes them unique. So we can track changes in adoption rates for PE-backed companies versus VC-backed companies versus all the other companies on our platform, sector by sector, geography by geography.
Yeah, yeah, it's super interesting. I have a bunch of thoughts on like the data, but we'll get into that as we get going. It's also look, it's rare for a company like Ramp to have a lead economist. So maybe tell us a little bit more about your role there.
It comes from the fact that we have this extremely unique data set. So we see business spend. Pretty much every aspect of business spend that might be occurring in our economy, except for payroll, is something that we have insight into, because that's what goes through our platform. Now, that's unique because the private companies that are typically doing this kind of work have access to their own unique data sets, but it's typically a consumer spend data set.
Hmm.
Very few companies have a business spend data set. In fact, even in the sort of government data sets that are collected about the economy, again, most of it approaches the kind of investment and spend that happens again in the consumer economy. There is no public or private data set that is tracking business spend to this level of granularity. And I would say that that's a big problem as far as the data availability for policymakers or business people to make decisions. Business spend is typically a leading indicator of where the economy is headed. That's typically one of the first things to flip if there's going to be a recession. And right now, unless if you were to look at ramp data, there's no way for even the best business spend data sets that people do talk about, the ones that make headlines in the Wall Street Journal or FT every other month, typically rely on surveys.
Hmm.
So you're just seeing, people's vibes about how things are going, but you're not seeing actual spend decisions. So the decision to start publishing this kind of work from Ramp first came from the fact that we have this unique data set. So we knew that there were things that we could say that other people could not. And second, it was that we believed it was not only helpful to the general discourse about what's happening in the economy for us to publish this kind of data, but it's ultimately going to be helpful to the type of customers that would be using Ramp to help them make better decisions with access to this kind of data and help them benchmark themselves against other kinds of firms and track how they're doing and maybe inform their decision making going forward.
Yeah, it's really unique. And to your point on business level spend data, there's not a lot of great access to that today beyond to your point surveying. And so super interesting, and we'll get into a bunch of what the data is telling you and kind of about adoption today on the AI front. But we recently published a report in partnership with you all covering AI adoption and PE backed businesses where we spend most of our energy. I think when a lot of folks talk about adoption, they think startups, tech companies, SaaS businesses, etc. but your data looks at the broader economy. So I find it really interesting looking at the data in the report that 59% of PE-backed businesses are leveraging AI versus 41% of non PE-backed businesses. And I'm curious, what are you seeing from an AI adoption perspective as it relates to PE-backed businesses?
So, when we talk about the proliferation of AI, I think it's important to talk about the fact that actual spend data shows that we're still really early. And even in that spend that's happening, it's on fairly modest implementations. Now, it's not necessarily that, a lot of the adoption's happening, particularly in the sort of early stages right now that we're in. It's just, hey, businesses are just giving all their employees a chatbot. It's not the kind of investment that shows, uh, you know, organization-wide implementation of these tools that connects to all the context, that is maybe even interacting with customers in some way. It's really just confined to these chatbots where you can only get so many productivity benefits. Now that's different at different kinds of organizations. If the adoption rates are different at different kinds of organizations. Private equity firms, VC-backed firms, or pre-P-backed firms are more likely to adopt AI than their non-PE or non-VC backed counterparts. You can tell a couple stories about that.
Yeah, you're seeing in the data, like, folks are starting with this gateway of maybe it's ChatGPT, like some of the basic subscriptions, and then you start to see that compounding effect to your point of
Yeah.
leveraging more tools, more specificity, more advanced models, et cetera.
Gateway is right. It goes the same way as the consumer habits develop for businesses. So early on for businesses, we saw the first AI tool that businesses would typically buy was going to be something like ChatGPT.
Mhm.
And that wasn't because OpenAI had this massive enterprise motion. Actually, for a long time, OpenAI didn't really have a enterprise focus. It was generally thought of as a company that had more of a consumer focus relative to the other AI model companies that were focusing on enterprise. And yet OpenAI was for a long time, and still is actually, the leader in enterprise adoption. Most businesses that use AI are likely to use OpenAI in some way. And I think a lot of that came from it being this consumer default, where you're the person at your firm buying AI for the first time, and you're likely to just go for ChatGPT because that's what you know as a consumer. That's a no-brainer decision. Interestingly enough, that's now starting to change as the consumer default is starting to change. Anthropic is now making these big consumer inroads, having been the company that was previously very enterprise focused. And now increasingly, Anthropic is the company that most first time AI adopting companies are going to buy from. And so you start to see these, if you would normally expect in this kind of marketplace for the company focused on enterprise to win, because AI is so nascent, uh, and because the buying decision is so new, most purchasers are going based on what they're observing in the consumer market and what they have experience with as consumers. And so it starts with OpenAI, maybe turns into something more complex over time, and then nowadays it's increasingly Anthropic for the first time.
In the data itself, like, what other sectors are you seeing, moving faster, adopting more AI that maybe was a surprise to you?
So you're right that engineering organizations, tech companies were early adopters of this kind of technology. The real question is whether or not we're going to see AI adoption happen at this kind of sectors that we wouldn't necessarily expect would be really early adopters. So, uh, you know, retail, for example, construction, manufacturing. These are the kinds of companies that uh, have reasonable sort of scalability issues to applying AI. For example, you can imagine a retail company might have extremely high productivity gains from using AI, particularly from some ability to integrate AI into its customer service operations.
Mhm.
Right, you can call in and you can get an AI instead that will resolve your concern in 30 seconds or less versus being on hold and talking to a person. It's a lot harder to implement AI in this kind of interaction. You kind of have to make sure that it's always right all the time. Versus with software engineering, you have a human in the loop who can confirm everything that the AI is putting out, and you don't push code unless you've already looked at it. If you have an AI running automatically on your customer service interactions, you can have extremely uh, scalable mistakes.
Mm.
Might have some issue where the AI is not fine-tuned enough and it starts giving out refunds that you can't afford or making promises to customers that you can't keep. or potentially saying something toxic and offensive to customers at scale. And so even if the AIs are 99% accurate and good in the field, even that sort of 0.1% uh, error rate could be catastrophic for uh, large firms that are operating directly with consumers. So that AI trust issue is going to be uh, the next most important thing to resolve before we start to see AI implemented at scale across organizations beyond just like the knowledge work, beyond just using it for a chatbot for your employees and data analysis or software engineering, and really seeing it be something that is rolled out in the field in a way that interacts with either consumers or clients or something that automates a lot of the busy work that often happens at these large organizations. There are companies working on that. There are AI companies that are specifically geared toward fine-tuning models for trust in the retail space, for customer service, for voice agents. Uh, there are companies that have already set the standard for implementing these kinds of tools at scale across their organization, but they're still early adopters. But I do think that kind of tech will proliferate as the technology develops and as people figure out what works and what doesn't, and how to set those guardrails for the models themselves.
Yeah. I mean, that makes perfect sense. I think the point on trust and um, errors that might happen at scale, I think are going to prevent some level of adoption across functional areas and sectors. I'm curious. So, given events, in recent months, what are you seeing in the data as it relates to general like SaaS spend versus AI spend, and are you seeing leading indicators of some change in spend behavior at in certain sectors?
So everyone's talking about SaaS apocalypse. Most of it is not yet backed up by a lot of the data on our platform. The stock markets tend to move much more quickly than actual behavior by these companies tends to move. So I think a lot of what you're seeing happening where Salesforce stock falls like 50% in a day is mostly based on vibes in the market and people's guesses at how things might change.
Hmm.
For the most part, people are also talking about whether or not billing is going to change for software companies, if it's going to be less seat based, if it's going to be more based around token usage or actual outcomes or agents or some platform fees. I think it's likely the market will move in that direction,
Hmm.
especially as agents end up being the users of this software rather than people. Uh, it's not something that's shown up in billing yet, and that's not that, oh, we're so early that it's not. It's mostly that companies have not figured out yet how to change their pricing practices. There is still some experimentation happening, and companies are thinking about how to remodel their pricing practices for their products. But we haven't seen like a Salesforce massively change how it prices its product. And so until that happens, I don't think we're going to see en masse a big change in how software is bought and sold. At least not yet. The biggest change that is happening, however, is the sort of development of AI native software that is helping provide alternatives to these otherwise large incumbents in the software space. So you don't necessarily need to buy from like a Looker or a Tableau anymore. Those are the big business intelligence data analysis tools that are available. You can probably buy from like a Hex or like an Omni, something that is more AI native and built in the last 10 years. Something that appeals to a lot more companies that are new and coming onto the scene. And in fact, in our data set, those tend to be the companies, the vendors that are fastest growing, even if they're not the sort of highest adopted ones. So there you get one of these realities of like the software buying decision. You don't necessarily want to buy the most popular enterprise software. Nowadays, you might actually prefer to buy the one that's relatively small as long as it's growing really quickly. Previously that kind of data was not available. You couldn't get this is all private markets, right? You couldn't get user counts for business intelligence software 5 and 6. Uh, and that's what we're trying to change with publicizing ramp data more. We want to publish these trends on the vendors that are growing, ideally because these micro decisions are extremely difficult for most purchasers at companies to make. And having more data allows them to make better long-term decisions.
Yeah, and it's grounded in actual purchase behavior versus sales and marketing hype, which can, I think, conflate where tool adoption is actually sitting. I think the spend data tells the real story.
And you'd be really surprised. Uh, uh, how much education there is still to do in these markets. I frequently do these kinds of workshops where I talk about essentially what we're talking about here. How do you buy AI and how are these trends changing?
Mhm.
And I'll do it for sort of various levels of technical expertise and audiences. But a couple months ago, I did this workshop for a group of procurement professionals, so like heads of procurement at medium to large size companies. So people in charge of buying software, essentially. And I made this slide deck where I talked about how to buy AI and I talked about the market dynamics and I talked about OpenAI and Anthropic and the big players and whatever. And I did this sort of early version of the presentation for the organizers so they could, you know, help me workshop and do some Q&A. And after I did my first go through, the organizer said, "Hey, it was really good, but it's way too technical." And I said, "Well, what's so technical about it?" And their first note was, "We have no idea what Anthropic is." And that was, for me, one of these moments where I realized, oh, wow, we're really in this information bubble where, not everyone needs to know what Anthropic is. But certainly you would think that the heads of procurement at large companies would know the second largest player in the most important sort of software development that's happened in the last 20 years. They should know who the second largest player is. And they didn't. And that is not like a knock at them. That's really a knock at me having assumed that that was obvious information.
Hmm.
Because again, we're still so early in this information environment. Like my job was to lead a workshop that would inform these heads of procurement about how to buy this kind of stuff. So I always try to remind people, even if you do know, by the way, what Anthropic is, you don't necessarily know how to use the agentic coding tools or Claude Cowork or the new stuff that's coming out. It is a very dynamic market for this. And it's pretty unusual and unfamiliar to anyone who's bought software before. The pace of change that's happening month over month. I mean, I see it for myself all the time. Like, I need to make videos. And so, like, I generally know, iMovie exists, but I found myself making a purchasing decision myself where I just had to buy some kind of simple iPhone video editor. And so I Googled best iPhone video editor in the same way that a big purchasing manager for a company might Google best CRM software. And most of what you find come up on a Google search page is just SEO driven pages that say, hey, use these, or it's the biggest one that has an ad at the top of Google search. And I found myself so frustrated. Like, just show me the most popular one. That type of data is not available for these kinds of purchasing decisions. I ended up just getting cap cut, but like, which is now actually something that I could have tracked in ramp data and use ramp data to inform my decision. It is one of the sort of fastest growing simple video editors that you could download for sort of content creation. Uh, and ultimately, that's, I think, why we build this kind of data set, is because even in my own micro decision making, I found myself so frustrated not being able to find something that seemed so basic.
Yeah, I think it's so relevant to actually look at the spend data versus the marketing and hype you might get from software providers on LinkedIn or through SEO or other channels, Gartner, Forrester, et cetera. Like spend data is actually what grounds or at least leading indicators of real adoption.
My goal for this data set is to obviate away a lot of what a company would either otherwise pay a Gartner or Forrester tens of thousands of dollars for. Instead of getting this report based on uh, expert feedback that you don't even know where it came from, or data that doesn't have a source. Ideally, you should just be able to go to ramp.com and see, hey, what are firms in my sector using? What should I buy? And what is the ideal tech stack for a firm at my level of development and funding and this or that? And you can just see data that allows you to make that decision yourself instead of not having any uh, solid information about the source of this sort of quote unquote expert feedback. What is really also interesting for me as we start to put out this sort of information about AI buying and the software market is how well received it's been by financial markets. Ramp data is now in the Bloomberg terminal for that reason. You can track in the Bloomberg terminal AI adoption by company and by model. And I often take calls with financial analysts who uh, are using that data to produce their own private market estimates of AI adoption or the size of these AI model companies. And they'll ask me assumptions that I made in my data and my methodology and how I approached it just so they can get their head around it. Because there are no other estimates of business AI adoption that come from actual spend data. There are surveys which I think have their own methodological issues. But there are no good benchmarks here. And so the simple fact that we're putting something out is additive to the public discourse.
Agreed. Yeah, agreed. Yeah, I think it's fascinating too. Like call it the typical cohort of customers leveraging Ramp tend to be more tech forward. And so your point on predicting like what is the makeup of spend and software and things that are running those businesses that are probably going to be a bit ahead in their industry. I think is a great way of leveraging that data, because so many businesses right now, the conversation is to what degree of disruption is happening, or to what degree of opportunity could you capitalize on with AI? It's a great example data set to look at. We spend a lot of our time working in finance groups and FP&A teams. Where are you seeing adoption in that functional area versus maybe others?
Well, finance teams, a lot of the great tech that's being developed isn't necessarily by the AI model companies themselves. Right? There are, particularly for finance teams, a lot of great tools being developed that use the AI models under the hood in a way that the accountants, finance teams don't necessarily need to even know that AI is happening. Closing the books, automating receipts, things like that. A lot of what RAMP provides, of course. So I think one of the really exciting areas of development will be the ability for companies to integrate AI in a workflow such that the employees themselves don't even know that it's happening and don't really have to interact with it. And that is, of course, the promise of the changes happening in the software industry. Ideally, you won't necessarily have to go into this or that software tool, and you can interact with everything through some agent or a chatbot, or it'll all happen for you in the background. So that is what I'm most excited about. That's some of the really cool development happening in the industry, and it's not that far off. There are already for many software engineers, this is the type of product that already exists for them. Agentic coding is essentially that. You can think about how you might apply that technology across different other work cases.
Yeah, that makes perfect sense. I mean, it's interesting. There's been such an acceleration, I think, that we've seen in the last several months on adoption, but we still get the question from CFOs and finance groups of not knowing where to start. Is there anything you see in the data or your experience where you're finding there's more of a foothold today than there might have been 6 months ago?
I think the companies that are hesitant to adopt AI are hesitant to integrate these kinds of tools across all the surfaces and schemes of their company data. There is this genuine trust problem and worry that if we implement this at scale across the organization, employees will use it in a way that gets out of control, either in the form of high costs, because AI models cost a lot if you use the most performant models, or secondarily, you get these sort of scalable mistakes that AI models can cause if you don't implement them with the right guardrails. Um, I do think that AI warrants a new buying process than most companies are used to. This is a really fast changing market where you have month over month changes where new vendors are coming online all the time and unseating the large players. Uh, you shouldn't be signing contracts for 5 to 10 years with the same software company. You should be evaluating all of your contracts on a very regular basis and assuming that there might be a new, better player for your market coming online, in any given month, and your buying decisions should adjust for that. I also think that companies should sort of get with the latest and greatest buying practices for AI. So that means, be on top of the changes that are coming from the main model companies. The models have become extremely performant even in the last 6 months. Uh, and the AI that you might be used to in 2025 or that you may be using already on your consumer plan or with the free models is not the same as what many businesses have access to, particularly if they pay for the enterprise plans. And so anyone who is in this buying loop should be experimenting early and often, and uh, and making sure that your employees at your organization also have access to the best models that will ultimately improve their work. So if you have this impression that AI is not something that's going to be helpful for you because you've used it before, you should constantly be reevaluating that prior, because the level of development happening is genuinely unusual and is not the same as any other software buying practice.
Yeah, I completely agree. I love the notion of, you shouldn't be signing 5-year contracts anymore. In fact, there's probably an argument to be made, should you be signing anything for more than 12 months, given the nature of evolution right now?
Yeah, I agree. I mean, if you can negotiate that. Luckily, I never have to negotiate these kinds of deals. I just get to sit from my research perspective and say, like, hey, this is what I would do.
Yeah, fair enough.
But yeah, I don't have to deal with the salespeople on the other side.
Yeah, that's fair. Well, look, let's fast forward a little bit. Like, if you think you look at the next kind of 12 to 18 months, and maybe the private equity industry specifically, what are some things that you think will play out, from either an adoption, a spend perspective? What do you think?
AI adoption is only going to increase from here on out. That should be obvious, but the intensity of that adoption is where I would put most of my eyes. So I think most companies have some kind of implementation of some AI tooling, whether it's a chatbot for all their employees. It might even be one of the free versions offered through like a Google Workspace or through, Microsoft's enterprise offerings. That's going to grow and develop into larger organizational commitments. So think about the uh, agentic tools that connect across all the contexts at a company. So the AI models will have more to work with and therefore will be able to do more tasks for you. Uh, I also think we'll probably see the companies that are developing really great tools to implement across organizations. So like a voice agent for customer service operations, I think those are going to become much more popular. I think we'll see a lot more uptake on that from uh, companies in the retail space, those that interact with consumers. There are genuine cost savings there and efficiency savings. So I think as companies experiment with that and we start to see these success stories, it's going to start proliferating much faster. Um, but beyond that, I also think there's going to be a lot of dynamism.
Yeah, I agree. I agree. That the dynamic nature of the market, I think, is fascinating, and just about every month it feels like one is moving ahead of the other. At least for the major LLMs. I got to say, this has been an awesome conversation. I appreciate you spending some time with me. And if you haven't checked out Ramp's AI Index, please do. Like, there's fascinating insights there. I think this spin related data is one of the best indicators of what's happening in the market right now, especially for tech enabled businesses. And lastly, be sure to check out the report that we just released in partnership with Ramp. We're really excited, and just again a fascinating topic that we're going to see continue to change. So thanks, Ara.
Thank you. Thank you for having me.